Hello guys, welcome to lessons. So today I'm going to be talking about inventory system. I'm just going to briefly explain the perpetual inventory system and the periodic inventory system. So let's get into the lesson. In a nutshell, perpetual inventory system uses a system that tracks the inventory in real time after every transaction, which means cost of sales needs to be calculated and recorded every time goods are sold. Now, this system is really good for businesses that sells stock every day, and I mean large amount of items. It's good for businesses that have large amount of inventory item in their store. For an example, supermarkets. So supermarkets uses a system called the point of sale. So every time you go into a supermarket, you pick up an item and you have to go to the tills to get it scanned. When that item is scanned, it is automatically and immediately recorded, which makes it easier for the business to compare their physical stock count with the recorded stock count. It also makes it easier for the business to identify if there's any theft that happened. They're able to even identify any stock that has been expired. So it's really good for those type of businesses that have large quantities of inventory. So as a company or as a business that uses a perpetual inventory system, when we purchase stock, we have to debit the trading stock account with the cost of the stock. Every time we make a purchase, we have to debit our trading stock account. And every time we make a sale, we have to credit our trading stock account with the cost price. This makes a change in our asset, because remember, inventory is an asset. So when we debit our trading stock account, we're increasing our assets, and when we credit our trading stock account, we're decreasing our assets. Any additional cost when purchasing stock. When I'm talking about additional cost, I'm talking about costs such as carriages on purchases. Maybe you needed to pay the delivery to get to the asset or to get the inventory into the premises, and you had to pay the delivery. That additional cost, you have to also debit it in the trading stock account when you're using the perpetual inventory system. So this system is very recommended because it's very effective and it's very efficient for businesses with large quantities of inventory, and that sells large quantities of inventory each and every day. Okay, moving on to periodic inventory system. Now, periodic inventory system is not really recommended because it does not record transactions daily. But businesses would decide to use the system when it's not always feasible to calculate the cost of sale every time goods are sold. I want to make an example of such businesses. Let's say an art gallery, sort of a business, or a car dealership. They don't really have like large quantities of inventory, or they don't sell large quantities of inventory daily. So they can opt to use the periodic inventory system. Now, for a periodic inventory system, when as a business we purchase stock, we record our purchases in an expense account, a nominal account called purchases. We don't record it as an asset, in the trading stock account as the perpetual inventory system, but we record it in an expense account called purchases. Also, another thing to note, our carriages on purchases in the periodic system, we don't record it in the same account as the purchases. We record it in a separate account called It's also a nominal account. It's also an expense account. We call that account carriages on purchases, right? It's not the same as perpetual system. And because in the periodic inventory system, there is no effort made to keep up to date the records of the cost of goods sold, we have to calculate cost of sales in a different way. So the formula we use to calculate cost of sale, we say opening stock plus purchases. We add our carriage and purchases, import duties, custom duties. Remember, you're not always going to have carriages and purchases and import duties and custom duties. Sometimes it's just going to be opening stock. And your opening stock is the stock that you carried forward from the previous year. Let's say this is a 2020 year assessment. Any stock that was available, that was a closing stock of 2019 year assessment, you bring it forward to 2020, and that is going to be your opening stock. And then you add your purchases, any purchases you've made during the 2020 year assessment, and any delivery cost you've paid, or import duties or custom duties. You add all of that, and then you subtract the stock that is left at the end of the year, at the end of 2020. That's how you're gonna get your cost of sales. So just to summarize everything, just to summarize it all, perpetual system is recorded daily. It's recorded after every transaction. And periodic system, they just make updates on periodic basis. That's why the most efficient method is the perpetual system. That is it from me, guys. I hope I made it very clear. Remember to subscribe and catch me on the next video.